What's going on, everyone? My name is Nicholas Merton here at DataDash, and today is September 27th of 2018. Well, folks, I hope you all are having a wonderful day today. Today, I want to spend some time to talk about a specific indicator that I feel is not only underused, but highly underestimated in regards to how powerful it can be in specific trading setups. And that is no other than what you can tell from the title, the volume indicator. Now, the volume indicator isn't anything really fancy. As we all know, it's most likely simply a measure of how much cryptocurrency is being traded. Sometimes they denominate that depending on what platform or exchange you're using and the amount of the currency being traded. So in the case of this, for example, we're taking a look at LISK on this specific exchange of Binance, and we can see that it's had 138,000 traded over the past few hours on this trading day. And along with that as well, sometimes you'll see it denominated in the volume of Bitcoin being traded. Usually Bittrex and other exchanges do that as well. But I want to spend some time before we dive into how I utilize this in a trading setup to talk about some checks and balances when you're using volume as an indicator. The first thing I want to talk about here is that cryptocurrencies trade on a variety of exchanges, and this is a really big issue. Unless you're looking at CoinMarketCap, for example, where you can get a broad range of volume on your currency, you don't really know the actual true volume of that given cryptocurrency. And this is also a two-way street here. So you not only want to get a broader picture view of volume, but we also have to denominate that a lot of this is market maker volume, okay? And market maker volume is irrelevant in this case. We want to go to an exchange that is going to show us a good amount of volume, but at the same time we know is actual retail or institutional traders trading on that exchange. And out of all these, what do you think is the best play here? Well, we can generally assess that it's going to be in the top 5, and in this case, it's Binance. Binance is where we see the majority of organic actual trading volume in regards to exchanges at the moment. We can see here, for example, like CoinEgg, these kind of exchanges, they simply have market makers trading. They're trying to attract people through fake volume. Again, not trying to just derail CoinEgg here, but again, go towards the exchanges you know have good volume. And once we have that exchange, which we do here for Binance, we can go about assessing this. Now, the second check and balance as well, when you're using volume in the way that we're going to be utilizing it, it's important as well not to be using this system for something like Bitcoin or a well-established cryptocurrency that has OTC markets. Now, why do I say that? The reason being is that in the case of Bitcoin, there is, again, it's still kind of rumored and kind of debated at the moment, but there is an equal amount, if not larger amount of volume on OTC markets for Bitcoin than there is on the actual retail exchanges, for example, like Coinbase or on Bitfinex. And a lot of people assess that is an important thing to keep in mind when you're doing this kind of trading behavior because volume at exchanges can lead towards very large misconceptions if there's a lot of volume going on off exchange. And this also goes for BitMEX as well. So you want to use this for specifically altcoins, kind of in unestablished markets where there's liquidity, but it's not something that's going to be on BitMEX, and it's not something that's going to have its own OTC markets where institutions can trade off exchange. All right. So once we've assessed those, LISK really meets as a good candidate. We've got it on a proper exchange here in regards to our view on TradingView, and we know that it's not on BitMEX and on all these leverage platforms or OTC markets. So how do I go about utilizing volume here? Well, this is a very simple trade setup here, guys, and it's a great way to step into a potential trade and have a low risk, a low risk to high reward profile. So how do I go about doing this? So let's go ahead and take a look at the chart here. We're on the daily here, and we can see that all the way back since July, we've got a good amount of price range here. The question that I end up asking when I'm potentially looking for these kind of trading opportunities is, where was the serious rebound off of a downtrend, right? We've seen, for example, we've been in a bear market of cryptocurrencies. Where was the first serious rebound we saw? And where did we see a lot of volume come in as well? Not only in price, but also in volume. Well, I would point right here. On August 15th, we could see here that we started to see a build up here, and specifically more on August 16th. This is where we really saw the biggest set of volume come in ever since back here in June. We can see that volume also brought about a nice rebound in price and a little bit of rally for the past few days afterwards. But we've also seen that there's been a correction down towards back towards the lows. Not exactly down to the lows, but down towards where we saw that first spike of volume come in. Interesting enough, and you notice that on the chart, if we take a look at it, we can see where the majority of buy volume came in around a little bit on the upper end of 4,700 Satoshis. Again, this was the day where we started to see large buyers come in, a few $1 million in volume. It seems that every time we come back down to that range that we start to get buyers coming in. Now, The important thing to note here, if we take it here to the hourly, we can actually see here that there was a lot of separate buy orders that meet around the same value range. So for example, we can see there's a buyer coming in buying 40,000 LISK. We can see one down here, someone acquiring a trade going for 50,000 LISK. We can see again another trade here of 50,000 LISK. And we can see a lot of these repetitive 50,000, 45,000 buy orders on LISK here. And this can tell us that there's a select investor or select group of investors who are really stacking up at these levels, and again are building a heavy weighted position for a longer term swing trade. So this gives us a really interesting opportunity. You don't get it that often, but when you do get it, you want to know how to play it right. And this is, again, offering a really awesome opportunity. Sometimes, this isn't financial advice, guys. You got to determine on the TA side of things if this meets for you. But what I would do as an investor is I look at this as an opportunity as a smaller trader to possibly ride the wave of a much larger investor. And I can see that every time the price comes down to that range that they're adding volume. They're coming in and buying. Now, why is that? It's because they have a weighted position in LISK here. They're exposed quite heavily, and they don't want the price going below there because they're going to start turning into the red, and it could lead towards a downward trend. It could lead towards a break on the double bottom where it could go lower than the price down here and could collapse much lower. So what they want to help do is provide not only a big amount of buy side activity the first time they buy, but they want to maintain that buy side activity at that same price range to make it support. Most whales in this space, or large investors, know that once they get that first exposure, if they're going to be the only major buyer coming in and the market really hasn't picked up a trend, that they're going to have to help form the trend. And we can see that here. The past 3 times we've really seen price come down here. Instant buys. Again, you're not just seeing, for the most part, a slow uptick. You're getting rebounds where there's a very long wicks here where the price actually comes up due to high buy volume. And again, we can bounce to the hourly and see that that's happening every single time. So again, big buy orders coming down when we test anywhere near this lower range, or if people start to sell, buyers come in to support the weight. So you don't always get this set up all the time, and it's not always going to be generally the exact same pattern or in the same time frame. But we can see that the simple concept works here. Now, how does it apply to a trade? I'll keep it very simple, guys. Now, again, this isn't how you'd have to approach it. You have to assess your own risk to reward profile. But what I do here generally is I give enough room to, like, let's say, for example, we made our entry point right here around 5,000 Satoshis. I would set my stop at a range a little bit lower than what we've seen before, just in case if we get some sellers coming in. And I would set it around a few hundred Satoshis below here, a few percentage points down below from my entry point. And this gives us a very, very risk-free trade. If it comes down and gets stopped out, in cryptocurrencies, you can make these types of losses. I'm okay with that because I understand that the reward that I'm taking on is much greater. I could also set my sell level up here to the previous highs, or maybe even higher here, maybe around 8,500 Satoshis in case things go towards the right side of things. So now you can see here that because of this larger investor, I have a very good chance that this is going to be a risk-free trade. And again, if I lose on it, it's not that big of a loss. If that investor starts to not be able to sustain the price, the larger whales that are buying at these levels, I get stopped out. It's not a big deal. I've got the protection set in place. There's nothing I have to worry about outside of that small loss of losses in regards to the trade. It's not that big of a risk that I'm taking on. I know, though, that there's a lot of buy support here, and there's a potential that that investor, as well as other investors, could come in and hopefully bring up the price towards my sell range. So this is, again, one of many trade setups, but it's one of my favorite ones. You can use it a lot in traditional markets. I used to use it all the time, and it's really, really good for picking off bottoms in markets, which right now I think is a very opportune moment for a lot of traders. Again, we're getting towards a market that's moving more sideways. We're starting to find some bottoms. We're getting some really large spikes on altcoins where multi-million-dollar trade orders are coming out on some of these exchanges, which is really fascinating. You usually don't see that too much until you start to see bottoms in markets. Anyways, that's it for the video, everyone. Thank you so much for watching. If you guys have any comments or questions, please leave it down in the comments down below. I'll try to get to answering it. And if you guys get another indicator or trading tip that you want me to cover, let me know down in the comments down below. But until the next video, thank you all so much for watching. Safe trading, and I'll see you all in the next video. Stay tuned.